Wall Street Wrap-Up is supported by Bamboolas, featuring live music and coming soon, tapas and wine upstairs. Bamboolas, the heartbeat of Frenchman Street.
This week on Wall Street Wrap-Up, the Dow Jones, after a 13-day rally, went negative, not seen in 36 years. But all good things must come to an end. The Federal Reserve raises interest rates another quarter of a point. But what does that mean to your credit cards and interest you're now going to have to pay? We'll tell you. The Fed's goal of bringing down prices to a 2% inflation rate. So will this be the last rate increase? And the actors and writers strike continue, and many believe it may go into next year, with both sides digging in, one side saying they want more, and the other saying it's a bridge too far. Tonight, we're going to be talking with Simon Gallagher from SPG Entertainment about the strike, cutting your cable cord, and the future of television. I'm Andre Laborde. We've got these stories and more. It's Friday, and it's time for Wall Street Wrap-Up. Hi, and welcome to Wall Street Wrap-Up. It's Friday, July the 28th. Well, it was a good week on Wall Street for stocks, and the Dow Jones ended a record 13-day win streak. It ended yesterday, and it looked as if it would end in the day in the positive. But with the last 2 hours to close, the market turned, and all the indexes ended negative. If it would have stayed positive just for 2 more hours, that would have been the first time since 1897. But it was not meant to be. And we did have a 13-day run. Now, this hasn't happened in 36 years. Back in January of '87 to today, the Dow Jones has increased over 1,500%. Now, for the year, all the indexes are up, with the Dow Jones trailing at almost 6.5%, and the NASDAQ leading up to just over 34%. Well, coming back to present day, Federal Reserve did what we expected them to do, and they raised interest rates another quarter of a point, or 25 basis points. And this brings rates to their highest in 22 years. Now, how does this reflect in your home? Credit card interest rates, on average, will now be over 20%. New car loans will be just over 7%. And new 30-year home loans are going to be just under 7%. Now, that's an increase of 71% from March of last year. Next Federal Reserve meeting is going to be in September, with 2 more followed in October, and then the last one for the year will be in December. Now, depending on the jobs and the CPI inflation data, that'll depend if they raise interest rates even higher. Now, those who predict more rate hikes to come, they vary, from Bank of America and Barclays banks thinking that there will be more hikes to come, to Goldman Sachs saying that they're finished with the raising of the rates of the year. I'll tell you in December 31st who was correct. And the stock market is looking at a 25% chance of another rate increase for September and a 40% chance of a hike in November. Now, there are some ways, if you can, to invest for this year, but you have until the end of this year to do it. According to the IRS, the maximum you can put in your 401k for the year would be $22,500. But if you're 50 years or older, you can add an additional $7,500 to that amount, bringing the maximum for 2023 to $30,000 into your retirement account. Well, how did our money do this week? Top sector of the week was communication services, and the sector laggards for the week were utilities, real estate, and healthcare. But the top stocks of the week were Alphabet and Meta. They were up more than 10% for the week. Well, this week, the Dow Jones, they closed today at 35,459, up 0.6 of a point for the week. S&P 500 closed today at 4581, up 1% for the week. And the NASDAQ, they closed today at 14,313, up just over 2% for the week. Now, you've heard about inflation. Well, how about streamflation? 5 years ago, YouTube cost $40 a month for their streaming services. Today, it's $73. That's an 82% increase. Netflix was $11 in 2018. Now it's almost $15.50. That's a 40% jump. And Disney Plus, that was $7 when it was launched in 2019. Today, it's up over 57% to just $11 a month. Now, when asked, most people thought they spent per month $86 on subscriptions and streaming, when actually it was $219 a month. That's over $2,600 a year. Variety is reporting today that the Emmy Awards for television is being postponed due to the writers and actors strike. So will the Oscars be next? That's called in television a segue to our guest tonight to talk about the actors and writers strike and where will they want a piece of these streaming payments and what is the future of television. Our guest tonight is Simon Gallagher, principal at SPG Entertainment. Hi, Simon. Welcome to Wall Street Wrap-Up.
Hi, Andre. Thanks for having me.
Simon, I'm curious, when it comes to the WGA, which is the Writers Guild that's on strike, and also you've got SAG-AFTRA, which is the actors strike. Do you see this strike continuing through the rest of 2023 and possibly maybe, do you think, into next year? How long do you think this would go on?
Yeah, look, great question to start with. I think it would be a very poor reflection on both sides if it does drag into next year. I think that this is something, having gone line item through the asks from SAG and the counter proposal, it doesn't seem like they're that far apart. There are certainly some bigger sticking points, but for the most part, they don't seem too far apart. So if they can't resolve those issues over the next 6 months, I think, again, would reflect very poorly on everyone involved.
The two sides, you've got, as I mentioned, SAG, Screen Actors Guild, and the Writers Guild, and they're wanting their issues, and you've got and I always think of it as the American Motion Picture Television Producers Association, because I don't remember the alphabet numbers of what they are. but you've got the motion picture television producers. Somebody's going to give, or both will give. Is one asking for more, like SAG, more than they really should, or is motion pictures producers wanting to hold off more than they really could give?
You know, I think certainly there's a lot of people that are members of SAG that are not earning that much money. Many of them are not earning over the $26,000 minimum to actually even benefit from the health insurance that SAG provides. So there's no doubt that there's a lot of people that are members that are deserving, I think, of a pay increase. On the flip side of that, the producers have already gone back and offered an increase that is larger than SAG have received since 1988. So it's a significantly larger than normal increase over the next 3 years. And yet SAG is still asking for double that amount at about 11% general wage increase. The real sticking point, though, Andre, is the ask for what have traditionally been known as residuals, so downstream payments after the first engagement that reflect based on the success of a show on some of the streaming services. The challenge there is that the whole model has changed with streaming, and the producers are being paid largely up front. They aren't benefiting from downstream residuals in the way that they were under the traditional cable pay TV model. So in some ways, SAG is asking for something that can't be delivered.
I mean, the days of watching at one time the three networks, then it went to cable. Well, now more and more people, especially as a younger person they're dropping their cable and just going cord cutting and just going streaming. Is that hard to calculate, like what you were talking about, of actors and writers are saying, I want a piece of this pie, but producers aren't getting that percentage anyway?
Yeah, absolutely. Very challenging. And the additional layer on top of that is that many of these streaming services are global streaming services. So there's lots of different layers in terms of trying to calculate exactly if you're going to be asking for downstream. And the other thing to keep in mind is many of these shows, given the volume of content that's being produced these days, many of these shows don't see the same levels of engagement in year 2 and 3 and beyond. They really fall away because there's this constant refresh of new content. So SAG's asking for something that the initial ask, I believe, was 2% of the overall revenue from these streaming services. I think that's just a complete overreach. Yeah. Now, I think they'll back away from that. But even still asking for significant downstream revenue, as I say, multiple challenges there because of the different ways in which you would calculate that. And as we've seen in studio accounting, as it's commonly been referred to, has been problematic for as long as Hollywood has existed. So to try and stay on top of how many people are watching a streaming service on a worldwide basis, and an individual show on a worldwide basis, very challenging.
Between the two unions of SAG, AFTRA, and also the WGA, which is the writers, do you think one would be able to settle before the other, or do you think would one hold out until both are settled at the same time?
We've certainly seen the directors settled with the studios in their recent negotiations, and they were certainly aligned with the writers. The writers lost a lot of power when the directors settled. So I suspect that one of them might be left out there, and you need to remember that the writers, there's a lot more scripts that haven't been produced that are still out there that could be licensed, whereas the actors are probably required a little bit more. I wouldn't call them less valuable, but certainly you need to have someone standing in front of the screen. In terms of the scripts, there are scripts around. They might not be as polished as the studios would want them to be, but there's certainly scripts out there that are very good that could be licensed and you could move into production if you had the actors.
Because both the writers and the actors are striking at the same time, and the directors just settled, that the Teamsters, the other trade unions are thinking, hey, this may be a time to be able to go ahead and strike as all in one?
It's certainly a good time because of the abundance of work and because the economy has been proceeding quite well over recent years. People are in a strong position and a better position to endure the challenges that come with a strike. So certainly, it's overall, when you look at the economy, I think it's you don't ever want to say it's a good time to go on strike, but it's probably a better time than many other instances. I think in some ways, I wouldn't be encouraging my members to go out on strike just because other unions are on strike. I don't think that because they could fold at any moment. So I don't think you want to make such a big decision based on what some other union is doing.
Yeah. There was a recent report, and it was either last week or might have been the week before, and it was by the Milken Institute, that they said within the next 30 to 60 days that the industry, the motion picture industry, could lose anywhere between like $4 to $6 billion in growth because of an income, because of this strike. First off, do you think that this is what it'll be, between $4 to $6 billion? And second, does this mean that for every 30 to 60 days that it continues, we're looking at another $4 billion and another $4 billion to $6 billion?
But I'm sure that is a very robust number that encompasses all elements of the entertainment industry. And I would suspect I think that's probably taking into effect or into account the fact that, do people stop watching television altogether? Do people cancel pay TV subscriptions? And what does that look like if you extrapolate that out for the next 2, 3, 4, 10 years?
There comes to be a point where I guess there will be consumers that may start to cancel their subscriptions. I mean, today, as we talked about with streaming, you've got Netflix, Hulu, two areas that you're very familiar with. You're looking at Paramount. You're looking at Disney Plus. Do you see a period where consumers may get tired of just the same content that they might have, that they may start canceling subscriptions?
Absolutely. If, let's say, Paramount, for example, you're a huge fan of Yellowstone and you had been holding on to your subscription because you're waiting for the final episodes of the current season to come back. Now you know that's not going to be coming back for maybe 12 months from now because of the time it would take to get the actors back on set and the production rolling, all those sorts of things. Absolutely, I think there's real merit there in cancelling your subscription and coming back to it at a later stage, because as we all know, it's reasonably easy to sign up and cancel these services. So I think there will be some of the second tier, for lack of a better description, services will absolutely see some increased churn. But on the flip side, Netflix has a ton of content, as does Amazon, and they have a very strong pipeline of content coming down the pipe. They also have access to some sports rights and unscripted content and content that's being produced outside of the United States, keeping in mind that SAG only really applies to US citizens. So in the UK and Australia, they've got their own unions in those markets. So those actors, even though they're in support of SAG, are not out on strike. So the actors in the US need to be mindful of the fact that they don't want to shoot themselves in the foot and see shows cancelled. And more importantly, they don't want to drive the streamers and the studios and the networks into a position where they have to produce more and more content offshore, because that's not going to benefit SAG members in the slightest.
Simon, when you have a company, and I'm thinking of like Netflix, and you're talking about they do a large percentage of their productions offshore, international markets. So if they're doing more productions then, so that will continue to keep the content going. Are actors, and as they say about an actor is their face is their canvas, but writers, and I'm thinking of during the McCarthy era in the early 1950s, you had many writers that were so-called blacklisted, but they still wrote. I'm thinking of Dalton Trumbo as one, but they still wrote, but they wrote under pseudonyms, different names. Do you think that actors first off, will actors that are U.S. actors that we think of be allowed to act in foreign productions? Will that be okay, or will they get sanctioned by SAG? And do you think writers will also just go overseas to write for them while the strike is going on?
You want to play the long game. The last thing you want to do is see yourself kicked out of the union and restrict yourself from downstream opportunities, keeping in mind that we think this is going to be resolved in the next year or so, or less. In terms of actors, there are a number of US actors, SAG-registered union members that were down in my homeland of Australia, for example, that as soon as the strike was announced, even though 95% of the people working on the production were Australian citizens, the SAG members walked off set same day. So it doesn't matter where it's being shot. If you're a SAG signatory, then you go on strike.
Milton Friedman used to say there's no such thing as a free meal. Somebody's got to pay for that free meal. So let's say a deal is finally made. So more people will have to pay. Will we be looking at higher subscriptions costs coming from the streaming services, or like when you and I go to buy a ticket to a movie at a movie theater?
As you'd be well aware, Netflix is essentially the only streaming service that's turning a profit at the moment. So streaming and subscription video on demand as a business model is not as profitable as maybe was envisaged 2 or 3 years ago when Disney dived in headfirst into this market. So it's already costing them a lot of money to have these streaming services to try and compete on a global basis and to pull back from the revenues they were generating when 95% of the US households had essentially a $80, $90, $100 pay TV or cable TV subscription. That revenue is not coming in the same way. Those subscriptions are falling away very quickly. So someone's going to pay, but the thing is there's already a lot of money being spent and it's not profitable. There's only so far you can push these streaming services. Where it might be a challenge is you may see some of these second-tier streaming services just say, this is not worthwhile. We're going to go back to the licensing model. And I speak about someone like Paramount in this instance, where you might just say, you know what, it's a better business model for us as a studio just to license our content to Disney, Netflix, HBO Max, whoever it might be, because we're not making enough money. It's not propping up our share price. So that's, again, the risk for actors and writers, is that they might not have as many buyers for their content in the future if they push too hard.
Even Bob Iger, who's now the CEO, who returned to CEO as Disney, he was saying that nothing is off the table because Disney is not doing very well. I mean, their last couple of feature films did not make the grade. Their Indiana Jones with Harrison Ford brought in a dismal amount of what they really were thinking. And they own ABC network television, and they said both ESPN and ABC, not that they're saying they're going to sell it, but the way he put it was nothing was off the table. So streaming services, that maybe like a Disney Plus, or if they're starting to sell because the costs are just so prohibitive.
Well, Disney has the additional challenge of the significant 2/3 ownership stake in Hulu, with a joint venture with Comcast, formerly with Fox. When they acquired Fox, or a large percentage of Fox, they secured that additional third. And before the very early stages of 2024, they're going to need to decide whether they take advantage of buying 100% of Hulu or whether they sell their two-thirds stake to Comcast. I've always been of the opinion that they should sell that two-thirds stake. I think that what they have in Disney Plus is probably more robust than what they have in Hulu, and that anything that Hulu currently has, they could probably recreate. On the flip side, I think for Comcast, it gives them a very strong asset, certainly a much stronger asset than their Peacock streaming service. So, but at this stage, everything that Bob Iger has been saying suggests that he wants to hold on to Hulu. So I think he's going to have to make some very difficult decisions, but I think he's going to have to sell something. And from what I can pick up in the commentary, in what he said in a number of interviews, it would seem to be the preference is hold on to ESPN and take that to a pure streaming opportunity. He has said he wants to hold on to Hulu, but as I mentioned, I'm not sure if they can hold on to everything.
Yeah. Well, and that also makes, if Comcast thinks that they're holding on to a part that Disney really wants, that makes their percentage go up higher and that they can hold out for a little more. Last weekend that we had the opening of both Oppenheimer and Barbie, and it was a huge weekend for both of those movies. Do you think this is going to be the last of the big openings?
You know, what was really interesting about the last weekend is that it was a big box office weekend without a superhero movie.
True.
Barbie's fantastic, but she's not a superhero. And it was very interesting to watch. You've got a certainly adult-themed film in Oppenheimer, and then Barbie is probably a bit more family skewing. But it was an unusual situation, and it almost gives you faith that maybe it puts things back in the favour of the writers, because it shows that there are new stories out there that aren't just reliant on CGI-generated superhero movies, and may inspire people to be a little bit more creative. There's certainly, what we have seen though is this flood of people back to the cinemas, which is, I think, very exciting and great for the industry.
You mentioned a little while ago, Simon, how there's so many scripts that have already been written but just haven't been produced yet. Do you know are there a lot of movies that are in the can that are, as they say, sitting on the shelf that just haven't been released? And I ask that because of the fact that if they do, this is an opportune time that they can start putting those movies out.
What I've heard from people is about 6 months of movies that are in various stages of post-production and would be available, will be coming down the pipe and could be a big debut for a streaming service or for a studio later this year. So, but I think things will absolutely start to dry up. And this is another reason why you would expect that by Christmas, you would hope and expect that there might be some sort of a settlement. But as I say, there's that one big issue that stands out to me is that revenue sharing basis and asking for a percentage of gross streaming revenue. I think they've been very generous. I think there's a willingness. Certainly, if you listen to Ted Sarandos, the co-CEO of Netflix, on their earnings call last week, he seemed very reasonable in his feedback and his willingness to lean forward and resolve any outstanding issues. But there are some that they just can't lean forward on, and that revenue sharing one, in terms of the gross number, I think is just a bridge too far.
How important, Simon, is the AI, the artificial intelligence, where writers, I guess, assume are worried about rewrites because of AI doing it. Actors are worried about their image being just duplicated.
It certainly is broadly discussed. If you go again, I've been through the asks from SAG and the counters from the Producers Guild line by line, and there seems to be a real degree of flexibility from the producers in terms of they won't use actors' images without their approval and payment, and it's not as challenging, and they're not being as unreasonable as Fran Drescher may have you believe, the president of the Screen Actors Guild. Look, she's an actor. She's being theatrical. She's trying to build some emotion around the issue, but it's not like they're agreeing to something that's going to stay in place for the next 10 years. Certainly, anything that might be shot in the next 3 years, if they agree to something, could be used 10 years from now. But they still have to go back and ask for pre-approvals or ask for approvals to use those images and make an additional payment. So it's not as dramatic as it's perhaps being presented in the media.
Where do you see, Simon, television in, let's say, 3 to 4 years from now?
Perhaps even sooner. I was certainly on a call this morning with someone that was developing a new set-top box for television that would have all your streaming services on it. It had a built-in camera. It would be able to determine who was sitting down to watch the television, and it would present up a personalized experience in terms of recommendations for content. It would be able to determine based on what telephones are in the room or what cell phones are in the room, who's there, and also being able to check through the camera. Is it one parent? Is it two kids? Is it the whole family? And present up recommendations in terms of content. But it could also, if it was a ad-funded service, it could present up advertising customized and personalized to the people that are actually consuming the content. So television will start to change faster than perhaps everyone's anticipating in terms of what you can do through set-top boxes, what you can do through a big screen television. And I think it will make it a much more personalized experience and more enjoyable.
Simon, that opens up a whole new can of worms, which I hope you'll come back for us to open up and start into this new one. I really appreciate you coming on board.
Thanks for having me.
Thank you, Simon. Hey, if you've got a question, maybe a comment about the show, we'd love to hear from you. Make it concise, make it pithy. Write us at andre@benecapital.com. So let's take a look at the markets heading into next week. But before we do that, on this day, July the 28th in 1775, the very first post office was established. But who was the first postmaster general? We've got the answer coming up. On this day, July 28th in 1775, the very first post office was established. But who was the first postmaster general? Benjamin Franklin. Well, for a wrap-up on Wall Street, Ford Motors is moving from fossil fuel or gas-powered autos to EVs or electric vehicles. They said in March, in the spring of this year, that they expect to lose about $3 billion in sales because of the EVs. But today, Ford is now saying that they expect to lose $4.5 billion in trying to push EVs, electric vehicles, onto the public. CEO of Ford, Jim Farley, said sales are not as robust as they had hoped. And that's a wrap-up on Wall Street Wrap-Up. Join me next week when we're going to be discussing the hiring shortages in the United States. We'll be talking with Tom Gimbel. Tom is the CEO of LaSalle Network. So with an unemployment rate of 3.6%, how will AI affect the employment market? We'll have that and more. Tom is going to be with us next week. And that's our show for Friday, July 28th. Our thanks so much to Simon Gallagher for being with us tonight. But as always, we appreciate you for allowing us into your homes this evening. Have a fun weekend with the ones you love. I'll see you next week. Remember, if it's Friday, it's Wall Street Wrap-Up. I'm Andre Laborde, and also remember, money never sleeps. Good night.
Wall Street Wrap-Up is supported by Bamboolas, featuring live music and coming soon, tapas and wine upstairs. Bamboolas, the heartbeat of Frenchman Street.